Well, hi everyone, and welcome to Buffett and Beyond Research Stock of the Week, and we're going over Novo Nordisk. And folks, this stock is up over 400% in the past 5 years, so let's get right into it. And remember, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. Don't forget that if you want a full free month subscription to any of these videos that we have, we put out 3 a week, 3 different videos on a Saturday. You get the 3 videos, and on Tuesday, Wednesday, Thursday, and Friday, you get a letter on the market and timing the portfolios. All we need is your name and email. We want you to get a free month subscription so you can see what we're all about. All you have to do is go to buffettandbeyond.com. Buffett is spelled with 2 F's and 2 T's, buffettandbeyond.com, and give us your name, your email, and you'll start getting a full month free subscription to our letters. And let's see what Novo Nordisk, which is an ADR, which means it's traded on the American Stock Exchange as a U.S. stock would, but it's a foreign stock symbol NVO. Now, Novo is a major producer of weight loss, you got to get this, insulin and diabetes care products, as well as treatments for coagulation disorders, hormone replacement therapy products. And the share of global diabetes care market is 34%. Folks, that's a lot of the world that has diabetes. And 2023 sales by region: North America 34%, emerging markets 22%, China 7%, and the rest of the world 12%. And it has over 64,000 employees. Folks, it's a lot of people work for this company. And one thing we want to talk about is Novo Nordisk plans to launch the next generation of obesity drugs before the patent expirations of the current bestsellers. So at least this company continues with its research. And when we just take a glance over how this company is doing, now Novo is in green, the green vertical bars, the average stock in the blue vertical bars. So when we look at the clean surplus return on equity, and think of your bank account, would you rather put your money in a bank account S&P 500, which is earning 13.5%, or in Novo, which is earning 32%? And then when we come to net income, it is almost twice as much net income, which is the profit of the average stock out there. And when it comes to revenue, it has 3.5 times, almost 4 times the average revenue of the average stock out there. Now let's look a little closer, and we want to look at the net income, which is the clean surplus earnings. Now, clean surplus earnings are different than the earnings that we hear about all the time, because the clean surplus earnings put all companies on an equal basis when they configure the earnings. In other words, the core earnings of the core operations of the company. And you can see it has been going up every year. Very nice. Clean surplus ROE, the average stock again, 13.5%. Clean surplus ROE of Novo, 33%. So it's more than twice the average stock. Now, the retention rate is about 5-year average, about 60%. Next year, they expect it to be 66%. Retention rate is how much money the company is putting back into itself in order to grow. And this is about the same as Eli Lilly, which we do have in our dividend income and growth portfolio. So the retention rates are about the same for both these companies. Net income growth again, and revenue growth way above the average stocks out there. Years to pay debt, almost nothing. It has almost no debt, and recent dividend is 1.3%. And we don't want to see a high dividend because we want to see the retention rate, the company putting money back into itself in order to grow. And how do we know they are reinvesting this money on a competitive basis? Because we look at that clean surplus ROE, and yeah, they're investing all the money, and it keeps bringing in the return on equity. So that means the retention rate is being used very, very efficiently on this stock. Now let's look at the 1-year returns of Novo. Black line is the S&P 500, up about 22%, and Novo is up about 38%. Now, I mentioned Eli Lilly before, which we have in our portfolio, up around 50% for the past 1 year. So both these stocks, which are in the same, well, the medical profession, the drug industry, I should say, and Eli Lilly seems to be a little bit better. But still, 40% over the 22, 23%, almost 2-to-1 beating the S&P 500 on the past 1 year, which means the past 12 months is really the kind of stock you want in your portfolio. Then when we look over 5 years, yeah, Novo is up over 400% with the market up about 90%. So it's beating the market by 4-to-1 or 400%. And it's doing very, very well, especially when you want to fill your portfolio with stocks that are outperforming the average stock in the S&P 500. If you want to outperform the S&P 500, and how many professional money managers can do that? 96% of professional money managers cannot, let me emphasize that word, cannot outperform the S&P 500 over any 10-year period. So therefore, in order to outperform the average stock or the S&P 500, you want to be in stocks that are outperforming the average stock. So you want to pick better than average stocks to put in your portfolio. And we did a lot of research when we had our radio show, which we had a lot of fun with. When we did our radio show, we would call in or call out for people to send in their portfolios, and they would. And they all had the good stocks. Every one of those portfolios had the good stocks. The problem is they also had half of their portfolio in the below average stocks. And that's the key to building a better portfolio. You want the stocks that are better than average and leave the stocks that are below average for somebody else to buy. That's all. There's tens of thousands of stocks out there, folks. You don't have to settle for stocks that are below the average stock out there. So when we look at the average stock out there, we say Novo Nordisk is one of the stocks that we should have in our portfolio. And when we look at the sky, just overlooking the beach, right? If you look to your left, well, you can't see it in the picture. You look to the left, this is the beach. So this is a little park that's sitting there that not too many people know about. And you look at that blue sky and you look at those clouds and you say, if I want to be on this beach like Jimmy Buffett used to, I want to learn how to invest even better than Warren Buffett does now. And folks, Novo is one of those stocks that should be in your portfolio. We don't have it in our portfolio yet, but boy, I tell you what, it's going in there. We already have Eli Lilly, which is outperforming Novo, but boy, oh boy, look at the returns on Novo. Yeah, it's the kind of stock we want. All right, folks, we'll see you in a few days. You have a great weekend. Most of all, be safe, be with your family, be with your loved ones. We'll see you next time.